Okay, hi everyone. Welcome to today's webinar. For today, we're going to be talking about advanced stochastic oscillator strategies. I can see a few of you guys still coming in. We'll give about 1 more minute for people to join, and then we'll get started. In the meantime, let me know if you guys can see me and hear me clearly. And yeah, I'll see you guys in about 1 more minute. Thanks, everyone. Okay, let's go ahead and get started. So, as per usual, a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of the material is strictly prohibited. So I'm Melanie and I'll be your speaker for today. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. We're going to start off with a really quick intro to stochastic oscillators, in case any of you guys haven't used it before. And then we'll talk a little bit about RSI because they are pretty closely related. And then we'll compare the two, followed by some divergence trading. So if you guys are unfamiliar with divergence trading, we'll definitely go through quite a few examples in this webinar. And if we have time at the end, I will take some requests as well for any charts that you'd like me to go through. Yeah. So let's go ahead and get started. Wait, let me just make sure you guys can see me. Okay. So how exactly do you use your stochastic oscillator? So wait just a second. Okay. So what exactly it is, firstly, is that it consists of two lines that fluctuate between 0 and 100. So the first line is called your K line, and it represents the current closing price of the instrument in relation to the high and low prices of a given period. The second line is called the D line, and it's basically the moving average of K over a certain number of periods. So I have a pretty more in-depth explanation of it here on the slide if you are interested in that. So the slow stochastic indicator, which is your D, is a 3-period moving average of K. Difference between the slow and fast stochastic oscillator is the slow K, which incorporates a K slowing period of 3 that controls the internal smoothing of K. So setting the smoothing period to 1 is equivalent to plotting the fast stochastic oscillator. So the fast stochastic oscillator is basically your K line that we mentioned earlier. Okay, so how do you use it exactly is basically for us, we will use the settings that are 533, the readings that are greater than 80 indicate that price is near its high. Readings that are below 20 indicate that prices are near the lows. Okay, so a security is overbought when K moves above your 80 line, and a security is oversold when K moves below 20. So I've included the formula for the stochastic oscillator as well in case you were curious. But most of the time when you're using this indicator on your MT4, MT5 on TradingView, it's normally calculated for you already. So this is just like FYI. Okay, now let's talk a bit about its pretty closely related cousin, which is your RSI. Oh, I also wanted to mention earlier that your stochastic oscillator is a momentum indicator, but it doesn't provide information about the direction of the trend. It's also a lag, means that it relies on past price data, and it might not be so effective in predicting future price movements on its own. So that's why we often will use stochastic oscillators with other indicators or Fibonacci levels and so on and so forth. Okay, about RSI, because these two we normally will use them together. So what is RSI? It's basically a measure. It's to measure the strength of the price action over a specified period of time. Commonly used to identify potential entry and exit points in the market. Your RSI also measures the magnitude of a security's recent price changes to determine whether it's overbought or oversold. Okay, so how do we use that? So it basically oscillates between 0 and 100, with values above 70 considered overbought and values below 30 considered oversold. So when the RSI value is above 70, it suggests that the security might be overvalued and due for a price correction, potentially indicating a sell signal. When the RSI value is below 30, it suggests that the security may be undervalued and due for a price rebound, potentially indicating a buy signal. Okay, so people use RSI in combination with other technical analysis indicators or your fundamental analysis as well. So that's why we want to talk about both RSI and stochastic together. Okay, so let's compare the two. So they are both price momentum oscillators that are widely used in technical analysis. And while they're often used in tandem, they each have different underlying theories and methods. So the stochastic oscillator is predicated on the assumption that closing prices should move in the same direction as the current trend. Meanwhile, the RSI tracks overbought and oversold levels by measuring the velocity of price movements. So in other words, the RSI was designed to measure the speed of price movements, while the stochastic oscillator formula works best in consistent trading markets. So yeah, so we would generally use your RSI in trending markets, stochastic more so in sideways or range-bound markets. Okay, so this is just an example of what your RSI and stochastic looks like. This is on TradingView. You can see it's pretty similar in terms of the price movement. So whenever we are expecting prices to drop, they tend to have a pretty similar price movement and price structure as well. Okay, now let's get into one of the biggest strategies that we use for stochastic and RSI, and that is divergence. So divergence in trading is basically a technical analysis concept that compares the movement of a security's price and an indicator, such as an oscillator that we're talking about here, to identify potential trend changes. So there are two types of divergence, your bullish and your bearish divergence. So I have some examples here of bearish and bullish divergences. There are regular, hidden, and exaggerated divergences, but let's firstly focus on our regular divergence. So your bullish divergence occurs when the security's price makes a lower low, while the indicator makes a higher low. So this suggests that the downward momentum of the security is losing strength and a potential upward trend may emerge. Bearish divergence, on the other hand, occurs when the security's price makes a higher high. So this suggests that the upward momentum of the security is losing strength and a potential downward trend may emerge. So it's important to note that divergence is a potential early warning sign of a trend change, but that's still not a guarantee. Okay, so that's why we would use this in combination with your trend lines or chart patterns to confirm a divergent signal before making trading decisions. Okay, so you can see the higher high that we're talking about for bearish and the lower high, lower low, higher low on our bullish. Okay, so now let's take a look at some examples. I think we have a bunch of examples to go through. Yep, so if you guys have any questions, feel free to just pop them into the chat. Okay, so first example, we have price testing a key horizontal resistance level with price making a smaller high, resulting in bearish divergence with the RSI. On our RSI, you can see a descending resistance line forming, and it caught the past two reversals correctly. So it forecasts that we could be seeing a reversal here. Okay, and the bearish divergence, you can see a higher high and a lower low here. A lower high, sorry, on our RSI. So you can see after that, that price reversed strongly because of three factors. Firstly, the horizontal resistance, the RSI resistance, and lastly, the bearish divergence. Okay, and that similar thing happened on RSI as well, where RSI reversed very strongly off of the resistance, the descending resistance on our RSI. Okay, and now another example here. This one's pretty straightforward. When price is making a higher high and stochastic is making a lower high, that is a bearish divergence. So pretty straightforward, and we are expecting prices to react off of that same area, which it did here. Okay, and it's also giving us a repeated pattern with our bearish divergence again, with price making a higher high, and stochastic giving us a lower high. There is also a hidden resistance level here. So you can see on our stochastic, these two peaks line up in this horizontal dotted line. Whereas on our price, you can see very clearly that price moved upwards, basically. So you can see price reversed very strongly after that bearish divergence. Yeah, and also after the hidden resistance. Okay, so this is the levels, or rather the areas that we're looking at. Okay, you see price making a higher high, stochastic kind of maintaining at this level both of these times, and that's basically called a hidden resistance. So hidden resistance is when our stochastic or RSI or whatever oscillator indicator you're using, basically at the peaks line up to give you a horizontal resistance level. Whereas on our price, you can see very clearly that the peaks don't line up. Okay, I think that's pretty straightforward. So let's look at another example. Here we can see that prices are moving in an ascending trend line, whereas on our stochastic, it's maintaining at this hidden support level. Okay, we have a stop loss here, your entry over here at this overlap level, and we're going in for a buy towards our take profit at this swing high here. Okay, so ultimately, this is the result of that, where we are expecting price to bounce off of the ascending trend line. So firstly, we have the ascending trend line. Secondly, we have the hidden resistance. Yeah. Okay, and that's exactly what happened here. Bounced off nicely and headed upwards towards our take profit. Okay. Okay. Now let's take a look at divergence potential. So in this example, we have an overlap level. Okay, overlap level is basically when there are swing highs, as you can see here, and a swing low that line up in that same area. And it just means that the bulls and bears respect that area. Okay, so we want to take note of where the bearish divergence started. So as this is the level that it will tend to reverse to. So you can see it started here, and our RSI is making a lower high, whereas on price is making a higher high. So we have a bearish divergence, price is making, yeah, that's basically what I just said. And we are expecting price to rebound to that same level, also because of that overlap level that I mentioned earlier. So we have two factors now coming to play, your bearish divergence and your overlap level. Okay, and you can see that's exactly what happened. Price reversed nicely back down to where the divergence started to occur. Okay, so that's why we always say not to use any one specific method or one specific method like your divergences that we've been going through, or one specific indicator like your RSIs. That's why we always use a combination of them, like your graphical methods, which is what I just mentioned about the overlap levels or pullback levels, swing highs, swing lows. Those are graphical, or your Fibonacci levels as well. And use those in combination with your divergence potentials, hidden resistances, and indicators, just so that it confirms your signal before you go in for the trade. Okay, and forecasting breakouts. So you can also use divergences to forecast your breakouts. And one way of doing that is by using your RSI or stochastic indicators. So firstly, in this example, we see that the RSI broke out of this ascending support, highlighted by this dotted line. So it broke out of it, even though on our price chart, it's giving us, it's showing that price is continuing in that same, I guess, ascending trend line. Okay, so that's the first point. Second point is that price is barely breaking out of the ascending support line. If you look really closely, you can see it kind of just peeking out below it. But it shows a strong recent bearish divergence versus RSI. So you see price making a higher high, whereas on our RSI, it's making a lower high. So that's your bearish divergence. So we have 3 points now, the RSI breakout over here. Secondly, we have a bearish divergence. And lastly, we have price just breaking out a little bit. So it suggests that there is a high probability that price is going to break out of this ascending trend line. Can see after that that price broke and dropped strongly. Okay, so just as we expected, price right after this bearish divergence, price broke out of it and dropped strongly from this trend line. Okay, any questions so far? Okay, if not, let's look at another. We still have a few more examples to go through. Before, if I still have time at the end, I will do a little bit of live analysis for you guys. Okay, so next we are looking at this RSI breakout again. What's the best time frame to use divergence? So, actually for divergence, we normally would use on a mid-range kind of time frame, so like your 1 hour, 4 hours, or even your daily time frame, just so that there's more time for you to see, kind of how the price plays out. Yeah, and also because on the shorter time frames, like your 5 minute, 15 minute, and 30 minutes as well, that kind of it's a bit it tends to have a little bit too much noise for you to actually um see the divergences, because price is constantly moving. Yeah, so to answer your question, one H1, H4, and a daily time frame. Probably wouldn't go more than daily time frame. Yeah, no worries. So what was I saying? Yeah, so on our RSI here, we see RSI breaking out of the descending resistance, and we're calling it a resistance instead of a descending trend line because for it to identify as a trend line, it needs to touch at least 3 times, which here you can see it hasn't. So that's why we're calling it a resistance level. So now price is now testing this descending resistance line, and we're wondering if it's going to break out of it. Okay, so that's our first point. Excuse me. Our second point is that there is a descending line breakout of our RSI. Excuse me. And lastly, there is a recent bullish divergence, which suggests that we could be seeing a strong reversal. So over here, we have price making a lower low and RSI giving us a higher low. So that is a sign that a bullish divergence, or rather that is a bullish divergence, and it could be a sign that we're seeing a strong reversal. Okay, so you can see after that there is a successful breakout of the descending resistance line as forecasted by our RSI. Okay, here is kind of a GIF for you to visualize what we are talking about by bullish divergence. So in this bullish divergence, we are using RSI as our indicator. You can see price making a lower low, and our RSI making a high low, which is a bullish divergence. That in combination with our resistance level here, that's also in line with a swing high and also a 100% Fibonacci projection. Okay. Yeah, so as you can see in the GIF, continued um price actually broke out of that descending trend channel and it reversed off of that resistance line. Okay. Okay, another example for bullish divergence. Here's a little bit smaller. You can see price making a lower low, RSI making a higher low. Another point is that RSI is actually moving um, below 30, okay, which is, if you remember earlier, that is a sign that price is oversold. So it could be a sign that price is going to rise again. So you can see after this bullish divergence, price did continue to rise. Okay. Yeah, that brings us to the end of my slides. Um, Let me just pull up my trading view and we can take a look at some charts and see if we can identify any divergences. Okay, do you guys have any requests for any charts? Mm, okay, if not, we can go ahead and take a look at um AUD first. Okay, so on our weekly time frame, you can see prices kind of moving in this downtrend. But on our daily time frame, we see prices generally moving upwards. Okay, I think we might have prices moving in a trend channel. Let's see. Okay, not really. Okay, but it is generally moving upwards. Okay, no. Okay, so going in with our support and resistance levels first, I'm gonna place my first resistance up here and my pivot over here. Okay, this is my first support. Now I'm going in with my Fibonacci levels. Okay, my 61.8 lines up. I'm also gonna place okay, actually no. I'm gonna move my pivot here. Okay, because it's a double swing low and also it's in line with our 38.2. Okay, now I'm going in with a Fibonacci extension. Okay, and my 127 lines up with my first resistance. Okay, so for that, we used this Nike tick shape that you see here. Let's see if we have any projections. Okay. Okay, my 78.6 also lines up with this first support. So this area here is our confluence area, which is basically when two or more Fibonacci levels line up nicely. Okay, that's our confluence area. Okay, my 61.8 kind of lines up with my first resistance as well. So for confluence areas and Fibonacci levels, they don't really have to line up exactly at your horizontal levels. As long as it's kind of near it, that's good enough. Reason being that price tends to be attracted to these areas, but it might not be able to pass through them or break out of them rather. Okay, so as long as you kind of get it's kind of around the same area, that's good enough. Okay, now let's look at some indicators. I like to start off by looking at Ichimoku and MACD because it's easier to see at one glance what your signals are. So now Ichimoku, it supports our bullish signal. MACD is not supporting our bullish signal. Okay, on our stochastic, let's see if we have any signals here. Okay, here it's not really telling us much. Let's look at RSI. Okay, on our RSI, we have prices moving in this uptrend. Sorry about that. Okay, sorry about that. So, where were we? Yeah, so we have prices moving in this ascending trend line. Okay, it's not really a trend line like I mentioned earlier because we need 3 touches on it, but it is a resistance level. So we are expecting prices to continue upwards here. Since previously it also um continued upwards. Okay, it also caught that bounce. Okay, maybe yeah, do you guys have any questions or any charts you'd like me to go through? Hmm, if not, yeah, I guess that's it for today's webinar. Thank you guys so much for joining me. I hope you guys found this session helpful. And if you guys have any questions or anything, feel free to pop them into the chat. I will still stay around for a while more. And yeah, but if not, you guys can go ahead and leave the session, and I'll see you guys again next week. Thanks, everyone. Yep, this session is being recorded. I'm not too sure where they're gonna post the video. So if you want, you can email IronFX. Um, yeah, you can just email them and ask them for the recording because it is currently being recorded. Yeah, just ask them and I'm sure they will help you out. Okay, yeah, thanks everyone. Bye.